Mortgage rates were actually trending down early in the year. Then they got volatile. So, what changed? In the beginning of 2026, inflation was cooling, markets were expecting rate cuts, which helped push mortgage rates lower. But if you've been watching recently, that trend hasn't been smooth anymore. Rates have been moving both up and down, sometimes pretty quickly, even in the matter of hours. The economy is still showing as being strong. So, people are staying in their jobs, consumers are still spending, and because of that, inflation hasn't come down as fast as the market had hoped. When inflation looks sticky, investors start demanding higher return on bonds, and that pushes mortgage rates higher. Now, this is something that a lot of people are confused about, so it's important to get it through. Mortgage rates don't directly follow what the Fed does, they follow the bond market, especially the 10-year Treasury. So even if the Fed is talking about cuts, if investors in the bond market think inflation is still a risk, rates can move up anyway. Now, let's talk about global conflict, because this is where things usually go in the opposite direction, believe it or not. So, historically, when there's a war or uncertainty somewhere in the world, investors move money into safer assets like US bonds instead of, stocks and other risky investments. That normally would push mortgage rates down. But this time, there's another variable at play, and it's a big one: oil. When a conflict impacts oil supply, oil prices go up, and higher oil prices ripple through the entire economy: transportation, goods, food, everything. That puts upward pressure on inflation yet again. So instead of fear pushing rates down, inflation is pushing them back up. And so these two things pushing against each other is why you're seeing so much volatility in the market, both up and down, instead of just a clean drop. So if you're waiting for rates to fall, just understand that it's not a straight line and it's going to be really hard to figure out what's going to happen and when, because rates are reacting in real time to inflation, the economy, global events. That's why timing the market is so difficult. But if at any time things seem overwhelming or confusing, feel free to DM me, drop a comment, or call, and I'll be happy to explain all of this to you in a way that makes sense.